Yep, wherever. Well, you're all awaiting this session, so I'm not going to take a lot of time, but this is the fourth year Honorable Minister is with us. We have always been encouraged by his thoughts, by the direction which he has provided. ENRich itself has evolved, as we have spoken in the morning, from being a conference to having labs which focus on some of these issues. And what Honorable Minister provides us is going to be the food for our thought and action for the next year till we come to the next ENRich. Before we hear Minister, Yezdi, may I request you to formally welcome.
Honorable Minister Shri Hardeep Singh Puri, dear guests, it is my absolute privilege to welcome the Honorable Minister back to ENRich 2025. Just a few minutes ago, the Minister was inquiring which is the number of how many years has he been. And just for the information of the group, this is his fourth year where the Minister has agreed to come and share his thoughts around this topic. Mr. Minister, I missed informing you that this is also the 16th year for ENRich consecutively. Mr. Minister, under your leadership, the energy sector has continued to deliver progress that is both strategic and far-reaching. From securing India's long-term energy supplies through international partnerships to advancing reforms that strengthen investor confidence and accelerating steps towards cleaner fuel, this sector has made significant strides. And these are not just milestones for the industry. They are outcomes that benefit the lives of citizens and reinforce India's credibility on the global stage. At KPMG, we are honored that you have chosen once again to partner us and be a part of ENRich. Through this flagship annual Energy and Resources Conclave, we create a platform where policymakers, industry leaders, innovators, and analysts come together defining issues of our time. And through ENRich Labs, which we continue to convene through the year, we are deepening this engagement with the government, industry, and academia. This year's theme, Reimagining the Energy Enterprise in Times of Change and Uncertainty, could not be more timely. The pressures of geopolitics, acceleration of technology, and the urgency of sustainability have all converged to define how enterprises must operate. Mr. Minister, it is therefore both fitting and invaluable to have you with us to share your perspective on how India will navigate through this new normal. We look forward to your vision on how the energy sector can continue to deliver security, drive transition, and strengthen India's leadership. With that, sir, it is my honor to invite you once again to deliver the address of ENRich 2025.
Yeah, you can speak.
Thank you very much, Yezdi. I want to congratulate you, KPMG and ENRich, for what you said was the 16th year. You said some kind things about me. At my age, people are always open to flattery, and I am particularly so. The fact of the matter is, I've been associated with the petroleum and natural gas industry for only 4 years. And I think in those 4 years, you've invited me and I've happily come. But since you've said nice things about me, let me reciprocate your kindness. I find this interaction with you every year. I came in 22, 23, 24, I'm back again. I find it enriching. Seriously, I'm not playing on words. Why? Because you provide a platform on which the cerebral people who do the analysis, people who are actually involved in the dynamics of the global energy markets, and a host of others come and interact. But more important, I think, the focus that you've had or you are having on encouraging startups, and that I think is the most valuable of all. I mean, what you do is otherwise very useful, but I think what you are doing for the startups. Now, I was looking at some figures in my notes. If you look at what's happened to India in terms of providing skills, in 2010, I know we're going to talk about that later, but we had 700 global capability centers. Today we have 1,800 global capability centers. And the projections that I have, and I think they are realistic, is that these global capability centers will rise to 2,200 by 2030. Now, if 50% of the Fortune 500 companies run GCC centers here, and this has gone up from 700 in 2010, and we are employing 1.9 million professionals and generating 65 billions in annual revenue. By 2030, we hope to reach, as I said, 2,200 global capability centers, 2.8 million jobs, and revenues of over 100 billion. Now, the work that the startups have done and are currently doing, I think at the very least it needs to be compiled in one place to show the frontier areas. I'm not just talking about artificial intelligence, machine learning, but you know, the whole range of work that these startups have done. I think you get a pretty good idea. Our association with KPMG is much more broad-based than the energy sector. But I think the energy sector is a good pointer to what we are doing with KPMG also. I don't know what I'm supposed to say in this, you called it a speaking or an inaugural or a keynote, I don't know. But I can tell you 2 or 3 things which come to my mind. The energy sector in India today is characterized by a certain degree of positivity, and I don't mean any one segment. There was one part of the energy matrix which was always regarded as merely a talking point. I mean the E&P sector. Because whenever you spoke of E&P, I shared with you over coffee just now, when we were waiting to come in, that one of the first pious homilies which was given to me by a professional in the sector when I joined in 2021 was, why do you bother about E&P? There's enough oil available in the world, there's enough energy available in the world. Now, I took that well. I was polite to that person. But I also told myself that if the rest of the story is what I think it is, that you have an economy growing at an impressive rate. I'm not talking about the last quarter's results, which are the first quarter of the current year, 7.8%, or the last quarter, that's the previous quarter, which is the last quarter of the previous fiscal year, 7.4%. Leave all that. Even then, in 21. And if all projections made by the International Energy Agency in Paris or elsewhere tell you that the Indian demand for energy will rise 3 times the global demand, or that for the next 2 decades, 25% of the increase in demand will come from India, then you ought to be redoing your sums. And I think that is where we realized that pretty early, that 2006 to 16 was what I call a lost decade, and I'm not making a political point. But what happened after that, I think after 2016, we brought in a lot of reform, and I want to fast forward. What we've done in that sector with the latest landmark legislation and the message which has gone out, and I think that message has resonated, and today the international oil majors, the 4 or 5 there are, there's renewed interest. They are cooperating with my friend Arun, who chairs ONGC, for the rejuvenation of Mumbai High, what they are doing in other offshore basins, etc. And the results which are being reported to the Director General of Hydrocarbons shows that activity. Now, most of you are not only familiar, I see captains of industry sitting here, but let me go to the cleaner biofuels energy. And by the way, I say all this as we are committed not only to availability, affordability and sustainability, but you've got to survive from the present to the sustainable. But our story on the sustainability journey is, I think, even better. We had 1.4% biofuel blending in 2014 when the Honorable Prime Minister took over. We had a 10% target by November 22. We did that 5 months in advance. We have a current target of 20%. Target date was 2030. We've done it 6 years in advance. And I want to put a full stop there. We will now assess where we are to go. All the stories you hear that we are now going to do another leapfrog, etc., we haven't come to those conclusions. The ecosystem is absorbing all this. Equally, all the stories you hear about biofuels being harmful for engines, there's a load of BS and B capital and S capital, and I don't know what that means, but it's an expression I learned. All the energy companies, all the automobile companies, everyone that I know, occasionally somebody will write a story. Oh, I interviewed somebody, he's an automobile engineer, and he said he bought a car in 2021 or 22 or even earlier. That car used to do very well. And then so I asked that guy, politely asked that automobile engineer which car he's got and why the mileage came down and where does he live. I mean, if he lives in Gurugram or in Delhi and goes to Gurugram every day, I can give you 21 reasons why the efficiency of the car will come down by 1 or 2%. I mean, what is all this? I mean, it seems that there is a storyteller out there who's, somebody said, look, let's be serious about it. When we move to cleaner energy, whether it is biofuels or CBG or green hydrogen, that is the imperative of the time. If I were a free agent, I would move away from fossil fuels. There were people, romantics like me sitting outside in the West in the UN system, which I also worked. They all want this set targets. Yes, very good. We have to meet the targets. And by the way, India is one of the few, probably the only G20 country which has met its climate targets. But as we move on that, we have to survive the present. Yeah. Now, I hear people say that, you have such a large economy and you can do this and you can do that. First thing that my Prime Minister has to do, because he's a democratically elected Prime Minister, is to make sure no matter what the weather conditions are, there is no shortage of energy in any part of the country. And that our guys ensure, my colleagues who are in the working in the OMCs, their people even in flood conditions, they take cylinders on their shoulder to deliver in the remotest areas. But look at the other advances that are taking place. I was with the Honorable Prime Minister in Numaligarh, which is in Assam, and he inaugurated the first bioethanol refinery, which is going to make ethanol from bamboo, second generation ethanol. About a couple of years ago, we inaugurated the Panipat refinery, which again is one of our IOCL. The one in Numadigal is Oil India Limited. That makes ethanol from agricultural waste there, and this one from bamboo. And there are so many other advances taking place. We don't all talk to them till they are ready, but I'm so encouraged by what I see in terms of laboratory results, in terms of conditions. So India is coming a long way. Our refining capacity, we are already, I think, the 4th largest refiner in the world. We will very soon enhance our current capacity from, I think, 260, 270 million metric tons per annum. We have already arrangements in place till 320. My boss asked me, rightly so, what are you going to do with all the refining capacity? Of course, he forgot to mention that he's the one who's piloting that increase, but maybe he was testing me. I said, we'll make more petrochemicals, and that's the right answer. You know, because our petchem requirement also today is less, our requirement is high, but our local production and availability is lower than global average. So I think we're doing very well on all fronts. Green hydrogen is a story which I am particularly proud of. What's happening in green hydrogen, I can tell you, when we started looking at the sector after the Honorable Prime Minister had announced from the ramparts of the Red Fort that he was going to take up green hydrogen in mission mode. That was, I think, 2 years ago. After that, government brought in a PLI scheme. They brought in a rationalization of how different departments in the government would do it. When I used to inquire, I was told that the most economically priced per kilo of green hydrogen anywhere in the world should be about $5.50 or so. We were determined to beat that. I think IOCL floated a tender, which I think one of our companies, L&T, won. They brought it below $4. And after that, I think HPCL floated a second tender, which was won by somebody outside. They brought it even lower. I think we're at about $3 something now, $3.50 or even below. 3.75. I'm very sure that when these tenders are replicated and scaled up, otherwise the price will come below $3. And I can tell you, once it comes to what, $2.5 per kilogram, you know, we spend $150 billion on energy imports. You'll see the massive shift that will take place to green hydrogen. Because all that green hydrogen produces is water vapor in terms of that. I know that path has been difficult. I was in Nagaland, Assam, the other day, people were saying we wasted so much time on this and that. That's part of learning. That's part of learning. If you could reach green hydrogen from the day you start and do a hop, step and jump, it would be easy. But, you know, the learning curve is there. But I think I want to conclude my comments by saying the work you are doing on the startups is truly, truly commendable. Because I look at the numbers, I look at what they've done. My request to you is please produce a compendium. No, not necessarily everyone. Some of them may not want it because they don't have proprietary, their intellectual property. But talk to them. I think they'd be all happy to figure in a compendium like that, and that would be digitally available. It adds to the knowledge base. Work we are doing in all the sectors, ENP, transition, sustainability, newer and newer technologies. I mean, some of them I can't share with. I can tell you, you'll be surprised at the areas which we are going. And then finally, the Prime Minister on 15th August of 2025, he announced a deep water mission. And I think that itself shows you the priorities. And it's not just looking for oil and gas there, but the products of, what you call it, a blue economy. I mean, these are waiting to be harnessed. There was a time I used to work on them. And today we are in a situation, I know I've got my friends from the fire brigade here. They're always looking for a particular kind of story, which these days I'm not obliging them. Where are you guys here? Raise your hands. They're there. One or two of them are there. No, look, the fact of the matter is that the world in which we live, it is undergoing some turbulence. And I'm putting it mildly. The fact is, we deal with the issues that we have direct control on. But today we have developed the resilience to navigate global turbulence as well. Partly because there is enough oil available in the world. I mean, there's more and more oil coming onto the markets from the Western Hemisphere in particular. There's more gas which is going to be coming on the global markets come 26, 27 onwards. That's availability. And no matter what you do, I mean, you can't control it and say we hold it back. No, the guy who's invested has to produce. Otherwise, if the transition takes place, you're left with your asset underground. So I think that is taking place. And the third thing, I think on all other related fronts, we are, if not ahead of the curve, but we are definitely helping shape the way things go. So I want to thank you for your cooperation. I've given you some of my thoughts, partly rambling, but when I came here, I looked around and said, what is it that I can tell them? And I'm open to any questions that you might have. Thank you very much.
Thank you, sir. So we want you to launch our TL thought leadership on how the GCCs are becoming the nerve center of the energy enterprise. And especially in this AI age, what is happening, what used to be the front office and back office are no longer
oh, you got it.
Yeah, are no longer distinguishable. They're all coming together. And India is the place, as you mentioned, where all of it can come together, not just for individual functions, for all of that together. This is something which we believe very sincerely, and we believe that by 2030, which is what we are calling out in the thought leadership, we are going to see a complete reshape with India being at the center of it and the GCCs being the center of that massive reimagination of the energy enterprise, which is why the conference has the title Reimagining the Energy Enterprise.
No, first of all, I can only applaud what you're doing. And you and the other international groups, consulting companies, other people, and I have a figure somewhere that half the 500 Fortune companies have their GCCs here. And I think reimagining the energy enterprise is a very apt theme for this year's discussion. I say that for a variety of reasons. You know, I've been a student of historical change, and I always look at continuity and change. But sometimes the continuity we take for granted and we don't see the change. But today I think reimagining is a better term, because there's complete quantum jumps taking place in how you deal with some of them. When we were in Numaligarh yesterday, my boss was talking about, bamboo cultivation, and he was talking about, genetic interventions on that. He was talking about how you could, processes, how these are. Now, if you've got a lot of professional people looking at these issues, now I'm moving away from India. These global capability centers are not serving India. I mean, they serve India, yes. I mean, they are located in India. But in any ways, this is something in India which is serving the world. Because these Fortune 500 companies, the bigger names, etc., they use the output or the product of that work in enterprises all over. No, I think that is the change taking place. I mean, we talked about globalization in an earlier phase many decades ago, when you thought the world is independent. It is. Global trade, the exchange of goods and services. But where technology and skills come in, I think the reimagining, and for India to be part of that, is both a matter of quiet reassurance. I choose my words very carefully. And also, you believe that you are producing I mean, I don't know what, I had a figure of 1.9 million staff. Now, if those people are working in the best of world conditions, that's saying quite a lot. And they're producing and they learn. I mean, somebody once told me, you brain drain ho gaya, people go outside. I say, hey, wait a minute. Many of them come back, they give ideas back. And the world of ideas and the technology and the skills, they can't be stopped at border measures. I mean, even services cannot be stopped. I mean, goods when they cross borders can be taxed or, you can put tariffs on them. But when services are there, you can supply them remote. You don't need rights of establishment there. When it comes to skills and these kinds of technology breakthroughs, I think that reimagining theme and the fact that what you can do sitting in Pune or Bangalore or wherever the centers are, and you could have the benefit accruing to you equally, you could end up having a, if you have a conglomerate somewhere, a big physics laboratory in Geneva and CERN is one. Yeah, that's a physical thing. But you can do a lot of research outside. Equally, you do Silicon Valley, but you could also produce that in, let's say, in Thailand or in India or somewhere. I'm saying that is the change, fundamental change that is coming through.
Absolutely, sir. And we are seeing a lot of that. What we are also seeing is those faculties, various things, research, engineering, coupled with a lot of other capabilities coming together and causing that reimagination. One thing, sir, what we have thrown a challenge to ourselves as well as to the industry is to induct the whole startup ecosystem into the innovation ecosystem, into their whole processes.
You please induct them, but just don't bureaucratize them.
Yeah.
Well, I always worry, I sometimes get excellent people from the marketplace who are, brilliant when you talk to them, interactive ideas. And they all remain, they retain their inherent vibrant qualities. But when you take a whole system and make it part of that, and you end also a little bit of bureaucracy. So use them in the best possible way. I think the strength of these, I hope they don't mind using word, footloose, or they have the freedom to, I have a friend who's a very famous author, and he also had a job in the university and in New York, and he tells me actually you get more original ideas sitting in the cafeterias outside Paris where intelligent people talk, than you would get in a controlled intellectual property generating environment in a university. I mean, I just had that kind of thought in mind.
Yes, and actually that happens in Bangalore.
Absolutely.
My daughter lives in Bangalore, and all she's overhearing is conversations around some of these
No, you get
ideas.
You get affected. I mean, for instance, we have a saying that any minister is only as good as his PS. Good, that's good, because I'm not saying hold on. But a PS also does well when he has a good minister. So, I mean, it works both ways. No, because if you are in the company of intelligent people, I know you got my friend here, anybody with him, he'll learn, he'll get inspired. No, he's smiling. No, its fact is, by association, learning is not a formal process only. There is a very high degree of the cultural environment in which you are, the kind of value system they give. And especially when it comes to innovation, why do certain parts of the country, I'm talking about India, I don't want to, you will say I'm taking a pot shot at someone else. No, why do some cities have developed a reputation, well-deserved, for breeding innovation, enterprise? Because I think you get a system around that. It may take place in the cafeteria, it may take place in other areas. You talk to people, and people do that. They also, by association, improve and then add to the overall process.
One more thing, and I know we are pressed for time, so we are going to have the thought leadership inaugurated. But before that, you mentioned briefly about diaspora and what role diaspora can play. Just wanted to dwell on that.
I have maintained, I was a serving diplomat for 39 years, and I lived outside even after that. I used to always place the population, overseas Indian population, at what, 25 million or something? Nobody has the exact number, but it's not whether it's 25 million or 30 million or 18 million, not. If you look at the kind of impact those guys are making, And by that, I don't mean just Indian passport holders. A lot of people, for reasons of economic security or whatever, they look at a passport as a travel document, they get the citizenship of the country they earn in, they do very well, and then they identify with the places they live in. But they also have some links to India. And if you see the kind of wealth that they have accumulated, I had a figure somewhere, what was it, about 3.5, yeah. No, they've done very well. But even if you look at the diaspora, which is not part of the 500 companies, I mean, if you go to, look, my postings where there have been large concentrations of Indian origin people, United Kingdom, United States, okay, parts of Europe, you know, you name it. I mean, I'm not suggesting that there is something special, but the fact is, if you look at the top CEOs in the United States, so many of them were either educated here and went there, or even if they were educated in America, etc. But they all have links back here. Look at the medical profession. When I was ambassador to the UN in New York, I used to have a once a year dinner at my residence for all those very high-class surgeons and physicians. It's very necessary, because if you have somebody coming from India and needs to be attended quickly, you know, that those friendships come in even more handy. You pick up a phone and you say, oh yeah, send him tomorrow morning, no matter what the list is. Many of them years ago started getting back in terms of your thinking. They started investing in people. If you look at the number of doctors who are coming back now, not a reflection of what's happening in those countries, no, because they also feel that they have a duty. If you look at the IIT graduates who went out, the IIM graduates, people from the pure science world, many of them are now, the interactive process is there. And I would like to believe that as we grow from a $4 trillion economy to a $7-10 trillion economy, that free flow up and down, many Indians will want to go there, others who are there will want to come back, other nationalities will want to come here. Because all the infrastructure required for that kind of cutting-edge innovation, etc., that will be available, and the opportunities will be available here.
Right. Yezdi.
Mr. Minister, thank you very much. It's really very, very intriguing and interesting. I had one question for you. I've drawn a couple of facts from what you just mentioned. One of the facts is we are growing at 7.8.
Last quarter, I mean.
Quarter one.
Yeah.
Another fact is there is global turbulence.
Global?
Turbulence.
Absolutely.
We, as a nation, individually, and particularly you and I, are very proud of the economic resilience that we've demonstrated. How do you see that translating into our strength going forward?
See, rates of growth are only one part of it. GDP will increase. Will it increase fast enough? As the cynics tell me, no, if you don't grow between 8 and 9%, you will, what did they call it? Middle income trap. It's a load of so-and-so. First of all, if you want to grow, we call it Viksit Bharat or a developed country. What it takes to be a developed country in Western Europe or any other high-cost economy for the welfare of your citizens are not the same as in here. I mean, you pay, I know, some kind of equalization takes place, but you want to set up an industry in one very important country which is going to be great again. It costs $3,000 to employ a plumber or an electrician. 300,000, not 3,000, $300,000 a year. Now, if I am somebody wanting to set up an industry anywhere in the world, and that's what global decision making is all about. You see, if I get raw material, let's say in country, hypothetically, Vietnam, And what is the cost of there? Is it cheaper for me to get the raw material from there and bring it to another place, or can I do it there? All these decisions ultimately will have to be factored in. So what you say is correct. We have today a situation where we can say this quarter was 7.8, last one was 7.4. Moody's, I think, no, S&P upgraded us after 18 years. So all I say is that, when people throw statistics at me, in the university we were told there are lies, damn lies and statistics. I don't believe that anymore. If the statistics are coming from a reasonably good, broad basis, you're okay. You're okay. So I think, Yezdi, you're absolutely on target. We will grow. I don't know if the decision-making continues to be of the kind we have now. You were talking about global turbulence. I think what the Honorable Prime Minister has demonstrated, we can utilize this turbulence to be an advantage. That's what you were also talking about. When we were sitting outside, what did I say to you, or now I'm growing old? I think we said we are beginning to develop an understanding of the hidden depth of our potential. And that potential is coming out, whether it's biotechnology, whether it is in the digital world. I mean, who would have thought 10 years ago what we are doing today? I mean, in terms of the, your payment systems that you are setting up. I traveled, 39 years I was a diplomat, 14 years I was an ambassador, and I used to have these phones then also. But you have a transaction here, in 2 minutes it comes back on your phone. It doesn't happen anywhere else in the world. I mean, there are little features. So India is learning, India is providing. You go to the remotest part of the rural countryside, and we were there in Nagaland and Assam and parts here, every little school girl has got a phone, there's a revolution taking place. Now, how will that translate into the kind of society we become? And that is where I think we are on reasonably good ground. Because you cannot have different parts of the country growing. Now, the thing that gives me most satisfaction is in the last few years, we have lifted 270 million people out of multidimensional poverty. That is a fact. And, when I was ambassador in New York, permanent representative of the UN, we were just finishing the MDGs and starting work on SDGs. And about the MDGs, the Millennium Development Goals, they said, well, MDGs succeeded because one large country, they meant China, succeeded in lifting hundreds of millions of people out of poverty with a little help from India, Nigeria, and so on. When it comes from the MDGs to the SDGs, Sustainable Development Goals, we took care to do two things. One is the MDGs were conceptualized in the think tank of the West, in the OECD. So a lot of it was, you must do this, there's prescriptive. If you want to do this, you must achieve this. Whereas the Sustainable Development Goals, we wanted to be from the grassroots level upwards. And once the SDGs started, we had those goals outlined and the subsidiary objectives, it became clear the SDGs will succeed if India succeeds. And because India is succeeding, and you can see the Indian success story all over, the SDGs are also succeeding. Because China is already there. It's technically, they call themselves a developing country. It's the second largest economy in the world. Make no mistakes. But India is not only just succeeding, there's something else happening. Which are the countries with which or against whom we compete? I don't like the word competing again. But which are the countries with which we are normally held in comparison? All right, the UK, when we became the 5th largest economy, we overtook the UK. When we became the 4th largest economy, we overtook Japan. And in a few months' time, we will overtake Germany at this rate of growth. If the next quarter is equally good, at least my oil companies tell me it will be good, so hold them to it if they're not. But UK, Japan, Germany, at what rate are those countries growing? I'm not singling them out. They're all growing between 0 and 2%. And you're growing between last quarter 7.8%, previous 7.4%. It's a different ball game. So if this continues at this rate, first, I think this 2047, Viksit Bharat 2047 is just a date, bit earlier. But you will have a GDP of a size which enables your per capita income to grow, to give you the same set of conditions which people have in the developed world. Now, development is not defined anywhere. Underdevelopment is. I mean, you can be a least developed country, your 37 or 38 of them are listed in the UN. You can graduate from that to being a developing country. But from developing to being a developed country, that's what you're doing now. And I think, Yezdi, that is the process. Sorry, I've given you a very long-winded answer, but...
Thank you. No, I think that's part of that we are traveling is phenomenal. You know, you mentioned many things, scale, talent, and now technology all coming together to make the difference. And as we have called out, the GCCs are becoming the center of that. That's not the only dimension of the Indian economy, but it's a key dimension which needs to be built upon. So may I request now for you to kind of launch the thought leadership. I'll also call upon my colleagues, Shalini Pillai, Akhilesh Tuteja, and Siddharth Malviya to come on the stage. Shalini leads our GCC practice. Siddharth leads the energy GCC practice. And Akhilesh, you've met, is the head of clients and markets. So we're going to request you to release the TL.
Wonderful comments.
Absolutely, absolutely.
Thank you.
Maybe I go that side.
Yeah. Shalini, come. Why don't you are the GCC head. We'll build on that, so there's more distance to cover. I mean, I'll come and brief you on how we can really scale that up.
No, I'm just giving you an idea, so...
Yes, absolutely. Thank you for being so generous with your time, sir. I know that you have lots to cover during the day, so please, we'll see it.
What does she want?
Yes, we have a memento for you, sir. So, Yezdi, if you could just present the Minister with a memento, my bad. I'll hold it. I'll come in.
Come. Thank you so much to you, Yezdi. Thank you. Bye-bye.
Thank you so much, sir.
Ajay, now my interviews.
Anvesha, will you take over from here? Nikhil, Anvesha.
Hello. Yeah, thank you. Thank you to Honorable Minister. I've been hearing him now for the last 4 years at this platform, and I must say, I'm always amazed by how he brings intellect, information, as well as humor into all of these conversations, and he really speaks from the heart. And of course, I love the fact that he patronizes us, and he basically ENRich, and he also kind of always gives his blessings to this platform. So next up is Sammy Ahmed, partner and energy leader for Europe, Middle East, and Africa, who has come all the way from Saudi Arabia to examine how energy enterprises can recalibrate strategy, structure, and capital allocation to remain resilient and profitable in this volatile landscape.
Great. And this is definitely one of those panels where we learn how to make money, right?
Yeah. So now we're getting the brass tacks, which is ROI. So that's where Sammy comes in. Sammy, welcoming you on the stage. If you can just welcome your panelists. Yeah. Welcoming your panelists. Is that okay? Yeah.
I'm just going to set the scene and then welcome the panelists.
Okay, that's okay.
They've stepped out. I'm trying to get them in. All right. Thank you. It's always a pleasure to be back in Delhi. I've just been told that some of the panelists have gone missing. So I'm just going to set the scene while we look for some of our panelists. We've heard this morning that the global energy sector stands at a critical point today, facing a demand surge, aging infrastructure, escalating risks, and the challenge of an elusive return on investment. I was actually fortunate to be here in India earlier this year at the India Energy Week, where I heard something that hopefully sounds familiar to a lot of you, that renewables alone cannot power the world yet. Oil and gas will still supply half of the global energy in 2050, and most of the 1.7 billion people that are going to be added to this planet will be here in the global south. We're also faced with aging assets, including pipelines, refineries, power plants, and transmission grids, all prone to failures, inefficiencies, and cybersecurity risks. Modernizing this infrastructure will require substantial investment, with return on investment made complicated by market volatility, regulatory uncertainty, and long payback periods. So yes, technologies like hydrogen, CCUS, and nuclear are going to be critical, but they cost money. And the challenge is not just supply. Decarbonization is being led by demand. Tech giants like Apple, Microsoft, and Google are moving faster than governments. But you heard the Honorable Minister today. Here in India, there is a refining boom. A refining boom is emerging. Collaboration among refiners is strong, and India is poised to be a global hub for refining and petrochems. Even as the world debates whether peak oil is real or simply a Western-centric narrative. So the questions before us today are sharp. How can companies navigate these challenges, and what bold steps are needed to balance energy security, affordability, and sustainability? And to explore these questions, our esteemed panelists today bring decades of leadership and perspectives from across the value chain. I think we found all our panelists now, so I tried to buy some time by setting the scene. If you could join me, please, in welcoming our esteemed panelists to the stage. Mr. Arun Singh, Chairman and CEO of ONGC. Mr. Sandeep Gupta, Chairman and Managing Director of GAIL. Please come to the stage. Mr. Prasad Panicker, Executive Chairman, Nayara Energy. Mr. DK Joshi, Chief Economist at S&P Global. And Mr. Pritesh Vinay, Group CFO, GSW Energy. Please welcome our esteemed panelists to the stage. So firstly, thank you for all agreeing to do the panel, and we look forward to hearing from all of you. So if I could start with you, Mr. Singh. How does India's growth and surging demand shape ONGC's strategy? I'm sorry you got that tough question first.
First of all, thank you. Thank you for inviting us to this. India story is fairly clear to the extent that you heard So India is poised to grow for next 2-3 decades, maybe highest in the world. Now all have to align their acts, and strategy is nothing but aligning the basic, obvious and future with country's future with ONGC. ONGC being a government company, obviously it gets aligned with the government objective. It can't have anything other than what is government objective. 2-3 big things that we see for ourselves. One is that chances of going wrong in India is very low, because growth subsumes everything. You may be wrong for 3-4 years, will not be wrong for decades. As long as you basically remain in the, particularly in the space of energy, chances of going wrong in India is very low, abysmally low. So you can be at best, sometime you may be ahead of time or somebody may be behind time, then no issue. But ahead time, sometime, but then you'll reap the harvest when the time catches up. So that way life is simple. Second, ONGC's particular 3-4 paths. ONGC is focusing currently on, you can say 50-50. ONGC has become already, if you see our now entire portfolio and all that, is 60% ENP company and 40% is a non-ENP company. Now 60% ENP, our space is now oil and gas. What we are noticing now, gas is becoming bigger and bigger. It in our share out also, gas is improving, gas production is lined up growth and all that for next 4-5 years. So gas is becoming more, and rightly so, because of the, you heard SDC thing, because our production is likely to go up next year handsomely in gas because of the multiple fields which are under development. But not good enough for country, because country is galloping. So third thing is that we have, Honorable Minister mentioned it just now. In the new era, I want to also sound little different. In new time of 2 decades, oil and gas exploration and production is now entering frontier areas. All the low-hanging fruits are almost over. Whether you name it better recovery or even deep water, ultra-deep water explorations, these are not the conventional area for us which we pursued for last 70 years. And therefore, your learning curve, your knowledge base is adequate for many areas, maybe little inadequate for certain areas. If the assumption is to go for frontier areas, like we badly need a big discovery, what ONGC got in 1974 in Mumbai High. Almost similar thing we need, so therefore we have aligned, and you saw government announcing that they will help us in Samudra Manthan because of this 1 million square kilometer coming out of defense and DRDO. So ONGC, if you say, more future in oil and gas space. So this is how ONGC's current themes are. So I hope I've answered your query.
Yes, no, thank you. Thank you very much. And we'll come back to your comments on oil in a second. Mr. Gupta, for you, we mentioned return on investment as a key theme today. Mr. Singh just touched on it too. With commodity price volatility being a constant topic, in your view, what is the impact on project ROIs globally?
So, in the context of energy, the commodities we can think of is coal, crude oil, diesel, gasoline, natural gas. Largely, these are the commodities. And a simplistic answer will be yes, definitely volatility impacts ROI. But if we delve deeper, coal has largely been stable and its prices have not been very volatile except for a brief period after Russia-Ukraine war. It is because of the inherent nature of coal and the coal trade that the prices are relatively stable. Crude oil is definitely volatile and definitely the volatility impacts the producers and I will come to the refiners later. It affects the producers, but thankfully, at least the Indian exploration companies, as Arunji also mentioned, till now they were low-hanging fruits, and the prices have not gone to levels which were not sustainable for the exploration company. So that did not impact ROIs much as of now. But going forward, as they explore deep water and ultra deep water, definitely it will be a very, very difficult case for them if the prices go down. Thankfully also, there is a cartel by the name of OPEC, which is helping them realize higher prices. Now coming to refiners, the per se price of the feedstock does not impact their profitability because what matters to them is the crack spreads, the difference between the crude oil prices or the product prices, largely diesel and gasoline, considering the yield of these two products in the total basket. And in my earlier stint, we have been doing this exercise and the conclusion was that over a long period of time, and I can consider long, more than 3 years time, 3 years period time, it normally averages to a decent margin for refiners also. So while there can be isolated periods where the margins are very good or very bad, but on an overall basis, on a long run basis, normally the averages were, the margins were sustainable. If we come to natural gas, perhaps this is the most volatile commodity as per the past experience. But then again, natural gas, if supposing GAIL is concerned, it is a trader of natural gas. Consumption is also there for our petrochemicals and that definitely impacts. But as far as trader is concerned, volatility generally is loved by traders and traders reap the benefit of volatile times. So it does not affect much as far as the return on investment is considered, and in any case traders, there is no return, there is no investment. But if the consumers of natural gas is concerned, definitely it impacts their margins to a great extent. There is one more area, one more vertical of all oil and gas companies, which though is not fuel, which is petrochemicals, and which is definitely impacted to a large extent because of the feedstock and the product prices, more so because they are not correlated well, and definitely it impacts the ROI. So to sum it up, I believe the most impacted is the E&P sector, and more so when they do deep water and ultra deep water going forward, and the petrochemical sector, though it is not a fuel. So I believe that these two areas returns are definitely impacted, and we recently saw that even the petrochemical players in Korea are looking at defaults on their bonds because of the poor margins, and the Korean government is going to help them out, bail them out. So perhaps these two sectors, I believe for growth of these two sectors, there should be sort of an assured margin below which if their margins go, then there should be some sovereign support.
So thank you, Mr. Gupta. Does anybody, I saw some nodding of heads, does anybody else on the panel want to comment on what Mr. Gupta said about commodity volatility prices? No? So we have consensus then on the panel. Thank you, Mr. Gupta. Mr. Vinay, if I could jump to you way at the back there. Building on ROI, let's turn to the financing side for a second. So the utilities sector faces many, many risks. If you could highlight some of the top ones and how these are influencing financing arrangements.
Thank you. Thank you, Sammy. A very good afternoon to all of you and to all my fellow panelists. Look, so in India, particularly in the local context, we are seeing also a big pickup in, the electrification of energy, if I could put it like that, and within that also, there has been in the past decade a very significant pickup in investments in, renewable energy generation. Yeah. So outside of China, India is the fastest growing RE market in the world. And which calls for, significant investments. I mean, the National Electricity Plan talks about almost $250 billion of investment required just on the generation side. And then when you add transmission and grid stability, storage, infrastructure, etc., we are talking about more than $500 billion of investment that is required, by 2032. But notwithstanding that, the track record so far has been very good because to answer a pointed question that you've asked from a returns point of view and the financing environment, from an investor's point of view, what is it you want to see? You want to see policy stability, you want to see institutional trust, and you want to see risk mitigation mechanisms, right? So I think India has offered a very, very, I would say, I'm very proud to say one of the very conducive environments on all three parameters, as far as the power utility sector is concerned. There's a very strong policy and regulatory certainty because of a long-term roadmap, and there are no knee-jerk changes in policy, right? We have seen some very intermittent, isolated cases, of certain states trying to renegotiate PPA tariffs unilaterally, but ultimately the courts of India have upheld the sanctity of the long-term power purchase agreement. So that has given a very strong institutional trust, because when providers of capital, whether they are providers of equity capital or providers of debt capital, are allocating capital for a 25-year, 30-year asset, you don't want to see certain changes in between, right? And hence, I think financing has not been a challenge. It's been the other way around. Finding bankable projects has been a challenge, because too much of global capital has been flowing in the renewables side, and the risk appetites have been higher because people have been trying to solve for building a certain portfolio of green assets. Yeah. And in the past, we've seen what is called, a race to the bottom in the discovery of pricing in the auctions for renewable, and which has led to, certain cases where, projects are not viable because financial closure can't be achieved at those tariffs. But overall, I think the environment is very attractive. Global capital is very conducive. Indian power developers have issued close to $50 billion of green and ESG-linked bonds in the international capital markets, which has found very good takers. So as long as there's disciplined capital allocation, as long as there's a correct pricing of risk, the returns are not so elusive.
So are you saying that the risk appetite now of investors has changed significantly from where it was before?
No, I think now you have a long track record of building that trust, to get the returns, right? Particularly in the renewable side. So therefore, India is, I would say, from a global investor's point of view, let me slice and dice this in terms of numbers. The total installed solar and wind capacity in India today, operational capacity, is close to 170 gigawatt. More than 65% of this capacity is built by a financial sponsor-backed platform, which has either a sovereign wealth fund or a global pension fund or a global infrastructure fund or a private equity fund as the main sponsors, right? So if you've seen this humongous amount of capital that has come, That tells you about the confidence that the investors have had in their ability to generate their hurdle rates, right?
Thank you. The Honourable Minister kind of touched on it today. So, Mr. Panicker, if I could ask you, a complex regulatory environment is now part of doing business in our sector. In your view, what steps are energy businesses taking to navigate the complex regulatory environment within our sector? It's quite a heavy question, sorry.
Thank you very much. First of all, thank you to KPMG for this platform, and it is very happy that 16 years and really good issues for India's development is being discussed. Very good question, but since it is essentially about the oil and energy, it is nothing great for energy industry to follow regulations, which we know for several decades, various types of regulations are coming from time to time. Depending on the evolving global situation, India was trying to catch up on many aspects, right from the quality of fuel, the service delivery systems, the facilities, the customer right, so many things. So it is nothing new for industry to follow the regulations. But now, this time is a different time, obviously because of the geopolitics, the regrouping of world, the availability of energy, the flow of energy, technology availability, and also along with the aspiration of India to be a developed country, as Honorable Minister said, we are going to see almost doubling of our energy requirement in next 20 years, coupled with a lot of sustainability issues. And also we have to ensure that we are giving affordable energy at all point of time. So the multiplicity or the complexity has multiplied. So the regulations or the involvement of government to ensure that industry is moving in the right direction, so that will be decided by the new policies and regulations. But as far as industry is concerned, we are being regularly updated. And also we know that our industry, oil industry in India, is predominantly by the government companies. So it is always have the support of the government, and the industry leaders is always in touch with the government. So we are getting adequate time and time to prepare, and also for the allocation of capital to ensure that we are doing this, complying with the regulations without impacting our profitability. So moving forward, I am not seeing any major issue with the compliance of the regulations, but we have to take a call. What type of regulations are necessary for us to get these multiple objectives in the next 15 to 20 years? Because this is the gap. This is the 20 years is the time then India has to achieve this growth. Because the positive factors now the country will last for next 20 years. By that time, we need a lot of regulations to ensure. And one such example, Arunji was saying about the investment that we are going to do in the upstream. The very, very noble cause, because we know that oil is going to stay and we need a lot of things. So how we would promote more investment in the upstream, matching with the more refining capacity, matching with more petrochemical, at the same time ensuring that we are having the economic sense in all our investment. So it is perfectly okay for the regulations, and we are geared up to meet all the regulations.
Thank you. So I actually have a follow-up to that. Just before I come to you, Mr. Joshi, I'll address this to Mr. Singh, but I mean, feel free if anybody else wants to follow in on this. So India is making massive new investments in the energy sector, particularly in oil and gas infrastructure. How do you balance that long-term commitment with the government's clean energy targets? Is this, I mean, do you see it as a contradiction, or can the two be reconciled? So first to you, Mr. Singh, and then I'm happy to open up to the rest of the panel.
So purely on number basis, number crunching, and there are lies, damn lies, and statistics. So I like that one-liner, so I'm not going to forget for my life. The fact remains, India can subsume everyone. any type of energy, oil, gas, coal, renewable, all are going to survive here for simple reason. We can't, till renewable becomes superbly affordable, till such time, round the clock power and all that, till such time coal is also going to exist, particularly in our country for at least next 2 to 3 decades. So there is room for everyone. What I am trying to say, there is room for him. It is something like in our mythology, India is like Shiv ki Barat. In India, there is a god called Shiv, where all types of people accompanied in the Barat. Good ones, bad ones, demons, God, everybody. So I have the firm belief that let all flowers bloom. There is a need for all flowers to keep blooming in our country, because as long as we keep growing at 6, 7%, 8%, where is, you tell me, we talk about EV and all that, just giving you pure numbers. Still our EV population is not 2.5, more than 2.5% of total passenger cars. Okay, I'm talking about the capacity to EV and all that. It will take time till really somebody becomes a clear winner. They're all here to run. That is one. Second point is ENP, your first question, that ENP investment. If it is going to be capital intensive space, those who are chicken hearted or those who can't afford, sooner or later they will get out. Okay. So energy has always remained capital intensive till the solar came. Anything you make in energy, power plant or even pump storage project is as good as 50,000, 1 lakh crore investment. Energy will always remain, other than solar panels and within the domestic use. If round the clock also is becoming very expensive, it will remain an intensive, capex intensive space. Capital intensive space can always be occupied by other public sector or government in one form or other, or the funds like what he said. If for the larger, greater goodness of the world, if somebody pension fund wants to do something, most welcome. But I don't foresee this investment will keep coming. You see that today even coal-based power plants now are coming up in our country. When did we say? 4 years, 5 years back only we said bye-bye to coal power plant. So what I'm trying to say, that let's not overplay. As long as there is life, there will be risk. This risk, those who do not have risk appetite, do smaller things, don't do bigger things. Yeah? Let the adults handle the bigger things. Okay? Let children handle smaller things. So this is how world has gone now, and that's how world will go on. So now some will come, some will go, journey will continue. Ultimately big will survive. 150 years, oil and gas. IOC have survived for 150 years.
Yeah, I live in Saudi Arabia, just so you know.
So 150 years these oil majors, no industry has survived, no company has survived for so long. You take the history of Shell, IOC, all IOC, Exxon, they are here for donkey years and they will continue for another century. That is the point I am trying to make. Big will always take risk and small will not take that risk. Ultimately, big will get benefited because if many don't take risk, there will be a space for those who have taken risk. Therefore, in banking industry, it is famously said, pessimists do fixed deposits and optimists borrow that and do that business. So that's how the outside optimists and pessimists get divided. But let's not, I'm saying this risk aversion and all that, for our sector, we'll have to take risk. In our case, I'll tell you very frankly, no chairman of oil company will tell you. When we found that risk is becoming bigger in size with deep, ultra deep water, we went to government and government announced that will come to your... So this is space for larger community, not for a small guy to do deep water. If he does, if he fails, he gets banished in this world.
Yeah.
So that point will remain valid for eternity.
Thank you. And it was my intention to ask... Provoke me. Yeah, to provoke. So apologies.
Everybody does that with me.
Just while I pour some water for Mr. Singh. Vinay, did you want to say something, Mr. Vinay?
Yeah. No. I completely agree with Mr. Singh. Just in the limited context of power also, while clean energy is a big thing, he has hit the nail on the head. 2024 was a turning point after a gap of more than a decade, we saw state distribution utilities calling for 25-year long-term PPAs for greenfield supercritical thermal power plants. I'm sure I was not there, but in ENRich 2023, if you had just done a poll of all the audience and asked for what is the probability of a greenfield thermal power plant long-term bid being called for competitive bidding, nobody would have voted for that, right? But the rate of change is so big. Because see, from a policy point of view, India is targeting for two big things: energy security by 2047 and net zero by 2070. Right? So even if we are putting a greenfield thermal power plant with a 30-year plant life today, which will get commissioned 5 years down the line, we will still be on track to meet the net zero by 2070, right? So yeah, he's right. I think there's room for all modes. Yeah.
So just to tone it down slightly with Mr. Joshi, I promise my question won't be provocative this time. Maybe you could help us kind of bring it all together. And your view on the volatile global macroeconomics and the change in the global trade order, what this all kind of means for India.
See, after the pandemic, first of all, thank you very much for inviting me, and particularly Anish, I think. After the pandemic, there was a change in the thinking. Countries started talking about resilience. Before that, it was all efficiency. So all the supply chains, everything was where you could get the cheapest. Resiliency meant that countries started being a little insular, inward-looking, and also we saw some tariff increases taking place. So the tariff walls were slowly going up, but it was all manageable. I mean, now I think in 2025, I think it's on steroids. So I think it's happening at a very fast, at a non-linear pace. Now, what that has meant is there's a huge amount of uncertainty. I think Anish was showing the chart on global uncertainty. I think one thing that struck me there was the uncertainty level today, as of now, is higher than what it was during global financial crisis and even much higher than during the pandemic. So it's an extremely high level of uncertainty that is playing out. And as a consequence of that, I think we are seeing the global slowdown take place. I think US economy is expected to slow down. China is expected to slow down. Europe is underperforming. It's expected to grow at 0.8%. So I think there is going to be a slowdown compared to 2024. So that's and then on top of that, trade is going to suffer. The WTO says that the export growth or trade growth is going to go down to minus 0.2% for goods. Services are still going to grow. I think so. That's one way to look at it. So I think as a consequence, I think we'll see a slowdown in the global economy. Now, what does it mean for India? All this. If I were to plot India's GDP growth and the GDP growth of advanced countries for last 40 years on a chart, I will notice that in the last 20 years, I think we've become more synchronized with the advanced countries as far as the GDP growth per year is concerned. Actually, you can plot it and see it's remarkable synchronicity. So which means that the pain there also transmits to us. But the more interesting thing there is that the long-term trend that is underlying that volatility in growth, I think they are divergent. India is moving up, advanced countries are moving down, and that's likely to continue. So that's one way to look at it. Now, what it also means is that it's very difficult to avoid the pain that takes place there. We are not insulated from that. And the three channels through which that travels to us. One of them is a direct channel. I think let's take India and US for instance. US is the largest trading partner for India. 20% of our exports go there. And if US slows down, I think our exports will slow down. On top of that, I think because of the tariffs, our goods have become more expensive for Americans. So that will compound that. So I think so trade, that's the direct impact. Indirect impact is also, I think the funny thing about trade wars is that even if you're not participating in that, there's a collateral damage that takes place. And I think that is going to play out through price reductions in Asia, excess capacity in China transmitting to us. It's also going to take place through other countries which are our trading partners slowing down, and it's also going to play out through uncertainty. So that is the global shock. Now the issue is, can India's domestic economy counter those threats. And I think for this year particularly, we are very lucky. Actually, oil prices is being often mentioned, and I think it's very important that oil prices stay low for India. When oil stays low, you get higher GDP growth, lower current account deficit, and lower inflation. So that's one luck factor. We don't control it.
As I said, I live in Saudi, so it's not the same sentiment.
Well, I think we import 87% of the oil. So I think, yeah. So the second good thing is that the monsoons turned out quite favorable, despite I think some problems somewhere. So these two factors are, I would say, outside our control, very favorable. India's resilience was being talked about. I think the external resilience comes from the fact that our exports are not that exposed to global slowdown as of other countries, because 47% of India's exports are services. And WTO itself says that services trade will grow at 4% and goods trade will shrink. So that is a natural cushion that you have. On top of that, I think the other positive element is that India's current account deficit is very low right now. It is 0.2% as per the latest data. What that means is you are less dependent on the mercy of foreigners to finance your current account deficit. In this volatile environment, that's a very good thing to have. So I think there are these cushions. On top of these cushions, there are some levers also. Very quickly, I think one lever is monetary policy, which we have already pressed. Interest rates have been brought down, and they will support the economy. On top of that, fiscal policy is also playing a role. The 7.8% growth that was being talked about, I think government has a big role to play there. I think the state government and the central government, the capex from them has increased at a very fast pace, 27% faster growth in capital expenditure compared to last year. So I think that is helping. And then on top of that, we also introduced another reform, which is goods and services tax. So what that has done, I think it will bring in, it's a reform, it will bring in efficiency in the system, better compliance, but a knock-on effect of that is, since the prices of many of the goods are going to come down because of taxes, it's also going to help consumption. So what I'm trying to say is that the domestic economy is in a very fortuitous situation right now, and I think it's going to offset some of the headwinds from the global economy, and we're likely to clock about 6.5% GDP growth, which would make India the fastest growing large economy.
So you mentioned something on resilience and tariffs. Just hold that thought for a second, but did you want to say something, Mr. Singh?
I wanted to say something. Generally, it is believed that, low oil prices, gas prices, it is nation interest and against ONGC interest. So often oil companies are termed as anti-national, particularly ENP companies. But what I wanted to tell you, because I saw some smile, Sandeep smiled when he said low oil and gas prices. We don't feel that, I want to set the record right, that oil prices will fall further. It will be range bound only because world can't afford it. I know for sure, US can't afford it, Middle East can't afford it. So wherever it had to come, it has come, good for country. We have made ourselves resilient by looking at our cost. Many things we have done. And also the fact remains that, gas prices will remain attractive for, at least for ONGC. Because ONGC sold gases at $1.7 at one point in time. With our investment and all that, I can fairly assure you, this room, that ONGC will continue to be doing well, even in the low gas, oil and gas environment of today. Because because they should not go the impression that, that we'll have some problem. Because I don't think it is going to affect ONGC too much. Less needle here and there, 5-10%, not more than that. Unless it falls to Mr. Joshi. But one thing, good point is, I was also harping on this point that from this forum we want to say is that a role of public sector and government is in India for next 10-20 years in bigger sector is going to grow. If you see today capital expenditure numbers of this year, it is government plus PSUs who are miles ahead of private sector. I'm using the word miles ahead of private sector. Private sector's risk aversion will continue because it is something that a family's risk wealth will go away. Here the government or PSU wealth is risk-taking appetite will remain high because it gets distributed to all 1.4 billion people of the country. So that's what I point and say. We should be resilient enough to see more dominant role of government for some more time to come, and that is manifested in current account deficit. What is Mr. Joshi said, 0.7%. I also don't remember ever in my life current account deficit at this number of 0.7% of GDP. So what I'm trying to say that I wanted to convey this message that role of public spending in Indians' life for next 15 years, you do whatever you want to do is not going to diminish.
Thank you. So, thank you, Mr. Singh. So, I wanted to come to you, Mr. Panicker, on something Mr. Joshi said. With, and apologies in advance for the heavy question. Please feel free to claim the Fifth Amendment if you don't like the question. With possible sanctions and shifting trade flows, India refiners are navigating this whole feedstock uncertainty. So how can refiners manage this risk? Is diversification enough, or do we need deeper investment in flexibility and technology? And how are companies becoming more agile to do business cross-border?
Thank you. A good question and good context now. But let us be very assured, no? The India and Indian refining sector has the resilience to ensure that what all happening in the geopolitics, we would continue to run at more than 100% capacity. The one reason why I am saying is that, as repeatedly said by the Honorable Minister also on many forums, enough crude is available, there is excess capacity available in the system, but there would be a lot of disturbance we have to expect in the supply chain, in technology transfer, the type of crude availability, etc., etc. But the 270 million capacity of the Indian refineries are designed in such a way that huge flexibility is inbuilt in what type of crude can be processed and what would be the dependency of this crude on the yield pattern. Which means that even if there is getting a different type of crude, we are not going to hugely impact the product availability or even that matter profitability. But the issue is on the supply chain, assuming that some of the choke points, because 87% is crude and 50% is gas, has to come to India from abroad. Yeah. So some of the choke points are a real concern. We saw in 2021, a one tanker blocked Suez Canal, just 12% of the oil flow is only through that, but it has become a global impact in 6 days with 12%. So that much of sensitivity is there in the issue, but at the same time, we need a resilience. There is a gap, I fully agree, because we need to have more of strategic reserve. It has to be created to ensure that these type of issues are not immediately impacting. When I am talking about strategic reserve, it should not be for crude alone. There are essential chemicals, catalysts, etc., which also we need to have adequate so that the operations are not impacted. Third, on a long term, we have to create an ecosystem that all the technology, services, and chemical catalysts and other materials are indigenously available. It is a sad factor that even though we have got 270 million capacity, refining capacity, we still have to buy many chemicals and catalysts from abroad. And today Ministry is saying that we are the fourth largest refiner and likely to be third maybe in another 10-15 years, and a huge growth. So we, in addition to creating refining capacity, we also should ensure that we are creating the internal ecosystem so that we have got the adequate resilience if geopolitics happens. One thing is very clear, moving forward, this is the normal. He was talking about that in comparison with even with the pandemic, today is the maximum disturbance happening in the world. Yeah. And this is going to be the normal, at least for the next 15 years. So, Minister rightly said, this is the time we have to understand the depth of our capability.
In fact, when I was saying I was in India, I heard the international agency state that India will be the refinery power hub of the world in 2050, not the second or the third. They will be the power hub.
Exactly. So that refining capacity growth alone will not make us that resilient and the hub. It has to be created along with the other ecosystems to ensure that independently we have all the internal capability to ensure a world-class operation of the
Thank you, thank you. And I've been watching. I've been watching the time here. It said 10 minutes for the last half an hour, so I don't think that's correct. So I'll take it as the last few minutes. But I want to pivot to technology, if I may, and if I may come to you, Mr. Gupta. Do you have a view on the various technology approaches taken by oil and gas companies to manage returns on investment?
The question is about technology, though I am not a technology person. But I believe the Indian companies, oil and gas companies, are mature enough and have undergone the technology transformations in the past also to see that the return on investments are maintained. Naturally, a large-scale transformation cannot happen in the existing facilities. But over the years, as and when the need for transitioning, depending upon maybe the emission norms or the fuel quality norms has been there, they have definitely developed, have transitioned to a newer technologies. A case in point would be the transitioning to, say, BS6 by the oil refineries in India, and perhaps this is the shortest time which they took to transition to BS6. So this is a case in point to prove that the Indian companies are mature enough to transition and to face any kind of need for transformation which may come up. Yeah, but if your question is in some context, you...
No. I was talking about, almost there is a dependency now on technology to diversify, right? You won't survive without pouring money into it, was really where my question was.
So that way, the oil and companies are otherwise also well integrated. If you see any group you take, they are well integrated, having maybe upstream interest, like say, if you say about ONGC, they are larger upstream players. Similarly, they have got large refining capacities also to support. Similarly, supposing GAIL is there, then we have got natural gas transmission, trading, we have got petrochemicals. So every company has diversified into areas to ensure that a temporary setback on return on investment on any particular vertical is offset by better margins in the other business.
So thank you. So let me, on that point there, I'll open it up to the entire panel. So they say no conference now is complete without mentioning Donald Trump or AI. And I'm visiting the US soon, so I'm going to ask about AI. Can AI help energy companies achieve a better return on investment? And I know the answer is going to be yes, but how and to what extent? I'll open it up to anybody on the panel if they'd like. Oh, yes, we have a taker.
Incidentally, this is a KPMG conference ENRich, and I do not know, Anish has left, perhaps he's not there. But a case in point is that we awarded a profitability improvement project to KPMG with an overtone of AI. And for a very paltry fee, KPMG took that contract. And I must tell you that the savings which we are anticipated are of the order of 200 crores on NPV basis. That means offsetting the investments. So I believe there is a great scope of AI in improving the profitability of the organizations. Fine, that is from my side. Yes.
So Anish just walked in at the right time.
Okay.
I thought we were going to be asked for a refund, but it seems like it was a good project. So lastly, in the last couple of minutes, Mr. Vinay, if I could turn to you, please. Again, on the topic of technology, how are utility companies balancing this innovation and financial resilience?
So maybe, I'll take a leaf from your previous question. Even across the entire spectrum of power value chain, there's a significant adoption of, modern technologies, including AI, machine learning, predictive analytics. right from, the micro siting, and the resource assessment studies for putting up your project sites, to project management. And once it gets operational, because power in India is sold in blocks of 15 minutes, so you have to do weather forecasting, you have to do a scheduling of power in advance, right? So increasing use of AI on the weather patterns will give you better predictability on the forecasting of, whether cloud covers or radiation profile or whatever, which helps revenue maximization, because if you vary your actual generation from the predicted generation, there's a deviation settlement mechanism, which is a cost to the generating companies. Similarly, when you go to the distribution side, India has one of the most modern, most advanced grids in the world. It's one nation, one grid working on single frequency. And this advantage is very understated, underplayed. I don't know why. When bulk of the problems in Western world is that the grids are all choked, right? So the 13, 14 load dispatch centers, where your load is varying by every minute, they do a brilliant job by adopting these technologies into, ensuring a better grid reliability, and the frequency and the voltage is maintained, right? So coming specifically to from an investment point of view, you're right, because as I said, I'll come back to the point I was trying to make earlier. What you need in large infrastructure projects is the right pricing of risk. So as long as you're able to do, and technology can only help because of, volatility and climate changes and geopolitical tensions and supply chain, so from running stress scenarios on your, investment decisions to when you actually get to operate assets, I think there's a significant role on returns on investment that technology can do.
Thank you, Mr. Vinay. So look, we're nearly out of time here, but if I could bring it back to you, Mr. Joshi, if I may. I know you're severely jet-lagged, but the last question of the panel for you, sir. We've spoken about tech, we've spoken about investment, we spoke about regulation, we've spoken about economy, and we started the conversation about the trilemma. The energy trilemma. So if you could kind of bring it back to us on your views of India's trilemma of balancing energy security, affordability and sustainability, and what's the opportunity for energy companies here in India or even globally?
Well, I think the trilemma is a reality, and I think economists talk about trade-offs. And here clearly the trade-off is between energy security and energy affordability on the one hand, and sustainability on the other. And this transition can be, this trade-off can be very acute, particularly when you are a low-income country. And I think that's, India may be the 4th largest economy, but in per capita terms, it is, I think, 130 or some such rank. It needs to catch up, it needs to grow fast. And for growth, you require energy, you require security as well as affordability. And I think as the minister was also pointing out, so I think that will get precedence, and it's got precedence as reflected in our 2070 goals. So my sense is that I think we will do energy sustainability as long as technology is going to permit it to do it cheaper. I think solar is a good example of that. And hydrogen was being talked about. I think if you break through in that, then I think you will again, that will become a source. Without that, I think we cannot give up our growth aspirations, so that's very clear. And so any innovation that takes place in the sustainability space, I think is going to be highly, it will bring you huge returns, so my sense is I think we are proceeding well on all the engines, but the moment the energy security and affordability start posing a challenge, I think all attention will shift towards that. And this is what is happening globally. We've seen companies, advanced countries open their coal mines, when threatened with the energy security. So I think that's the broad direction that I feel we'll follow. And I think we are proceeding well on all fronts right now, and we are managing the trilemma reasonably well. But different points in history or different points in future will will give precedence to one factor over the other. But my general sense is that on a trend basis, security and affordability will take a precedence. And I just want to say one more last thing.
Please.
We often talk about energy transition. I think when it's not about just reducing emissions. I think in India, energy transition takes place in other forms also. I think if you are providing 100 million women cooking gas, I think they're transiting from burning firewood to clean energy, comparatively cleaner energy source. Now this reduces lung disease, this reduces cancer. So I think what I'm saying is that these are also various types of transitions that India is attempting apart from the bigger transitions that is being talked about, which is emission reduction in general.
No, I absolutely agree. In fact, I heard someone recently say that it's a topic among the rich when we speak about energy transition, but for a lot of the people in the world, it's from actually nothing to something. That's the real transition.
Yeah, one Nigerian minister was pointing out that what transition? We need energy first. So I think so.
Thank you. So that's a great note to end on. I think do we have time for questions from the audience? No? Yes? I can't see what you're saying, so I'm going to assume, huh? Sorry, just one question from, oh, that was very quick. If you could ask your question and point it to the appropriate person in the panel.
Deep water or ultra deep water, exploration to commercial production, 10 to 15 years at the minimum. Vis-a-vis the breakthroughs that we hopefully are likely to see in green hydrogen or some of the other, ammonia mix in energy charging and all. Do you see a change in the way that ENP companies are going to go forward? You had also pointed out that 60% of your business today is in traditional ENP and 40% in non-traditional ENP. So how do we see the Indian, energy exploration business from oil and gas diversifying into other areas and the extent of that? Thank you.
Thank you for your question.
To answer your question, I'll say that if there is a big, breakthrough in the sense that something happening like what Einstein did to the world after Newton, the 200 years gap. So if that breakthrough happens, then naturally we have to change our course. But as of now, if you remember 4 years back, somebody said 111. Correct? $1, 1 kg and 10 years. Pardon? 1 decade. So, you know what happened after that. But if something breakthrough comes, then naturally we'll revisit. We are also human beings. We are not animals. We are going to change our course in no amount of time, no time, if should it come. But right now, what I'm trying to say, right now there is no need to do that course correction. Even, I'm also telling you that two facts you must remember from the evolution of science. We may claim we have evolved, we have all that. Still, world leaves 70% of oil and gas underground. What we recover is only 30%. Still, cars, 65% of fuel energy is wasted on not driving the car. Okay? 65% of fuel energy is wasted on non-transmission on issues. So still, we have not been able to make an engine which at least transfers entire energy to the wheel. Miles to go. What I'm saying is mankind will have miles to go. We have touched what nature gave us. We have exploited thus 30-35%. I have a famous theory called 35. When you meet me in private, I will tell you. Everything in the world, mankind has exploited so far not more than 35%. So 65% is still left. I think there is no need for panic. 5,000 years our civilization has existed. It will exist for another 5,000, 10,000 years, that too with a great growth. That's my belief. Thank you.
Thank you. So look, I think we've run out of time. Thank you for being a fantastic panel. I think we've learned a lot today. So if you could just give a huge round of applause for our panelists, please. I think we have a gift to give to you. hopefully that's not a problem given we're doing a project for one of you. Oh yes, it's personalized, all right.
Thank you, Sammy, and the panelists for this really enlightening discussion. Now, let me invite you all for lunch outside, and we'll meet back in an hour.